a place where I see traders get continuously tripped up is in defining their time frame. They'll have a list of rules, a list of signals, and they end up conflicting with one another. They'll see a trade developing on a shorter term time frame and then another one developing on a longer term time frame, and the rules and the signals will end up, sometimes they'll converge, but other times they'll conflict. And when there's that conflict, they end up getting tripped up. They don't know whether to buy or sell, or if they should hold, or if they should end up exiting the trade. And so what will often happen is we'll be in a trade and we'll see a shorter term signal and we'll want to act because it's on our laundry list of things that we should act on. And we end up exiting. And what inevitably happens is that trade will continue on for much longer. Conversely, we'll see a signal that tells us that we should hold on, and then a signal that tells us that, oh, maybe we should be getting out. So we decide to hold, and then the trade starts to roll over and we start doubting ourselves. This happens again and again and again. We need to be crystal clear on our time frames, on our rules, on our signals, and all that. And it's all part of the learning process. The learning process for trading is the most difficult thing. The planning, the execution, the research, all those things are pretty simple, pretty straightforward. It's the education and putting all of it together, synthesizing it all, that takes a long time to learn and a long time to master. So I want to walk you through a recent trade that we had in Mercadolibre. This is a trade that we started in November and we ended up exiting towards the middle of April. So there's really three main lessons or three main themes that we're going to get out of this trade in Mercadolibre. The first one has to do with knowing our time frames. The second has to do with having a consistent set of rules or a consistent set of signals. Well, we don't want to start mixing and matching all of our different rules or signals. Well, we might have different rules for different time frames or different signals for different time frames. Because we've defined what time frame we're working with, we want to have just one set of rules that we're going to follow for that time frame. The last thing is that we want to consistently apply these rules. It may sound simple, it may sound basic, but it's doing the basics consistently over time that really helps us execute and really helps us be successful in the market longer term. So what we have here is both a daily chart on top and then a weekly chart down below of Mercadolibre. So let's take a look and zoom in on this weekly chart first. So going back all the way to February of 2016, we could see this long-term uptrend where Mercadolibre is touches it and starts to get support around this black line here, which is the 40-week line. It runs up and then it starts to consolidate, kind of gets support around that level, and then it finally starts to break out right over here, and that's where we get into the trade. And you also look at this level over here, you can see like how it shakes out below the 40-week line, and then it rallies back above and it starts to tighten up right here. So that's something that we always like to see when we're looking at stocks, when we're looking at leadership, when we're trying to find a specific entry point into any particular stock. We want to see progressive tightness, because it's that tightness that's going to give us the advanced entry that lets us have a relatively tight entry point and a stop loss down below, where if it does roll over and continues to consolidate or really fall off a cliff, then our exit is going to be pretty quick. We want to cut our losers as quickly as possible. So pretty clear exit right there. Another point on this chart that I want to show you before we move on to the daily is this down here. This line is the relative strength line, and the relative strength line versus the S&P 500. We want to buy stocks that are leading and are beating the market. So as this line continues to move higher, it's showing that it's a leader and that it's a leader relative to the S&P 500. And over here, when we finally bought it, it was this line was flat and starting to break out and starting to outperform. Right, so it's proving that it's a leader. It's starting to break out, and this is another confirmation right here that it's a leader and breaking out. The other thing that I want to highlight on this weekly chart, just to throw in one more element, is that if we take a look at these volume bars, these weekly volume bars, as it's consolidating, you see that it starts to sell off, and it's selling off down here on heavier volume, right? So that's a sign of distribution coming in. Then it tightens up, right? It's tightening up, the volume starts to drop off. Over here, there's heavier selling volume, but then as it consolidates, it starts to rally on heavier volume. As it's tightening up and it starts to break out, then we're seeing more volume come back in. Ultimately, when we're evaluating any kind of stock, it's going to come down to how price and volume relate to one another. We're going to want to see volume come into the stock, but it's ultimately going to be the price action that's going to dictate which way it's going to go. Price trumps volume. Price is the most important thing. On the daily chart, we could see that spot for that couple of weeks, about 3 weeks or so, where Mercadolibre really started to tighten up, and it's right over here. So what I really like about this particular setup is that you have your advanced entry point right there at 274.55, and we end up getting in on this day as it breaks out. Well, we get in intraday, and the way that we're able to get in and take advantage of these intraday moves is really just by placing our order with our broker. We set a stop limit for this trade. And then once it's executed, then that's it, right? So we could place this order on the weekend while the market's sleeping, and then it just sits and waits with the broker. Then if it happens to cross that price, then we buy it and we're in. And we already know where we're going to get out. That's another crucial thing too. So we want to place our stop below support. Support's down here. MELI broke out, it gapped up, then it started to consolidate, it undercut that low, and so now that's the spot where support is. So if it breaks out and then it rolls over, if it breaks below here, then that's a sign that it's going to continue to consolidate. If not, then the bias is still upwards. But it's not just looking at that. That's not what makes this a really good trade. What also makes this a really good trade is that there's multiple layers of support right at that level, right at this $250.73 level. What makes it so good is that when we enter over here, now it's getting support at all these other moving averages, right? So the 50-day moving average, but also the 200-day moving average. So really long-term support right there, plus that low. So many elements working in our favor are ready to not get stopped out of this trade. Again, well, we're looking at this on the intermediate term time frame. So all of our signals are going to be that of the intermediate term. We get in at 274.55, and our initial stop is at 250.73. our entry to exit on this trade is 8.68%. So we enter this trade on November 24th. What's going to get us out of this trade? We have 3 clear rules that we follow that will help us exit this trade. We want to exit a trade when we get these 3 strikes. When we get a break below an intermediate term moving average, so the 50-day moving average, that's strike 1. Strike 2 is going to be when we break an upward trend line. And number 3 is going to be when we break below an important intermediate term support level. So let's walk through this and see what happens and some of the things that we needed to hold through. So zooming out a bit on this chart, you can see that Mercadolibre broke out, started to run, and then it comes back in, tests that 50-day moving average, this red line right here. And we could see that, well, when it makes this peak over here, let me get my ruler. We're sitting through what's about almost a 20% correction from when it makes this peak over here on January 29th to when it consolidates down on February 9th. And just for some more perspective, here is a look at what the S&P 500 was doing at that time. So February 9th, this is what it looked like, right? So this is February 9th over here. So we already had that huge sell-off towards the end of January and in the beginning of February. And it was nasty to have to sit through that. You're sitting with these positions, you're on the intermediate term time frame, and you're wondering, should I be selling everything or holding to sit through this, right? To sit through this wild market, this heavy sell-off where it looks like the world is about to end. Sometimes the rules could go out the window if we're not strictly adhering to our rules. If we don't have a plan, then something like this could cause us to exit everything and blow out of all of our positions. But that's not what we did. With MELI, we're still here, we're still holding on. It hasn't broken an intermediate term level of support yet. It hasn't closed below the 50-day moving average. So as far as this trade goes, there's on the intermediate term for the rules that we're following that have led to other huge gains in stocks like Adobe and Intuitive Surgical and other trades. You need to be consistent with how we are going to apply the rules. Sometimes you will get shaken out of positions. Sometimes you'll be able to hold through. In this particular case, we held on and we were able to hold through. MELI continues to rally from that point, advance, and then it starts to consolidate again. Now, over here, it's starting to break below the 50-day moving average and close below the 50-day moving average. So there is your first strike. But should you exit on your first strike? Well, if we were to exit on our first strike, it's something that we would need to apply on every single trade. We need to be consistent with any of the rules or signals that we're going to apply. We don't know what Mercadolibre is going to do tomorrow or the day after that or the day after that. We just know what it's doing right now. We just know what all of our trades are doing right now. That's why it's so important to apply the rules consistently over time. And another thing that people get tripped up on is having this rear view mirror approach where like, oh, if I would have just exited over here, then I would have been able to get out at the top. Well, what rules or signals would have gotten us out there that, when applied consistently, would have worked on every trade? We can't We shouldn't just pick and choose what rules we're going to follow when. We need to apply them consistently over time, and that's what's going to allow us to be profitable in the market. So the trade continues, and we end up breaking below this uptrend line over here. If you could see it, Mercadolibre formed this uptrend line, and it started to break below it on this day there. That was strike 2, and then it finally broke below support down here, strike number 3. From that day where, back in February, when it broke the 50-day, reversed, and rallied higher, we end up finally exiting this trade right over here at $319.77. And, well, we make 16.47% on this trade, which is good for nearly 2 times the amount that we risked. So, you might have been looking at this trade and thinking that, well, you had an opportunity. You could have gotten out over here. You could have gotten out when it broke below that uptrend line. But what would have happened if we applied this to every single trade? Let's take a look at Intuitive Surgical that we spoke about in a prior video. If we decided that we were going to exit on a break below the 50, and if it starts to close below the 50-day moving average and it starts to break support, so let's say we had this as a level of support and it started to break and close below that level, and now it's below the 50-day moving average for multiple weeks. Taking a look at this weekly chart over here, let's blow this up a little bit. You can see that it breaks and closes below that 10-week line, then it's closing below this weekly low over here, and it does it again, right? So, should we have exited Intuitive Surgical? Well, applying the rules consistently allowed us to still be in this trade. Who knows how far it's going to run? Right now, we're up close to 50% on this trade. Could turn out to be a 100% winner, who knows? But it's by consistently following the rules that allows us to participate in a trade like Intuitive Surgical or exit a trade like Mercadolibre. One final point on Mercadolibre and all these rules and signals. From my experience and from my partner Adam's experience, it pays to keep the rules as simple as possible. I know that the temptation is to over-optimize and to squeeze out as much as we possibly can from every single trade. We want to get in as close to the lows of a trade as we can and exit as close to the highs of a trade as we can. And that's a temptation. But we need to keep it simple, and it's in keeping it simple over time that allows us to win longer term. It's not just one trade that is going to make or break our account or make or break our year or our success over the long term, 10, 20, 30, 40 years of trading. We're going to have hundreds of trades over that time. It's consistently applying a set of rules that will allow us to be able to get in as early as we can, be able to maximize our profits, and really keeping it consistent and simple where we can apply these rules continuously over time. It doesn't take all that long at all to execute these trades, plan them out, and even do the research. What does take a long time is learning all this stuff. It takes a long time to learn what rules to follow and when and how to apply them and what time frames to apply them on. Thankfully, you don't have to do all this stuff alone. You don't have to follow the path that I originally took of learning how to trade by getting kicked in the face by the market again and again and again and again. You can learn from my mistakes. You could watch all these videos, and I definitely encourage you to do so and to let me know what you think about them. but you could also earn while you learn. We have an advanced stock report service where you could follow along with every single trade that we're doing. My partner, Adam Sarhan, writes it. He specializes in the intermediate term time frame, and as part of that service, he's including a model portfolio that shows you exactly where to get in, exactly where to get out, how much to risk, the different types of position sizing strategies that you may want to use, and it's also going to give you access to him directly and to me directly, and that gives you a combined 30 years of experience in the market. It really is a fantastic value, and you get to test it out. We want you to test it out. We want you to be successful. You get to try it out for 3 whole months for only $27. Use coupon code YouTube, and I'll give you a link to the sales page. It's going to be somewhere up here. I'll definitely link it down below, and test it out. Kick the tires, see if it's right for you. This is a service that helped me get better at trading on the intermediate term time frame. I used to be terrible at trading on the intermediate term time frame. I was one of those people where I would have that big laundry list of rules and signals, and so many of them end up conflicting with one another, and it's like, well, when do you apply what and where and how? So for a long time I just punted that intermediate term time frame, and I was focusing on swing trading. And swing trading turned out to be very good and very profitable for me, but I also wanted to learn how to trade on the intermediate term time frame, because that's where you're going to have these 100, 200, 500% gains or more. And that's something that Adam specialized in. So just by following along with Adam, I was able to triple the return of the S&P 500 in 2017, and we're already doing fantastic in 2018. We're still holding on to Adobe from January of 2017. We did a video on that a little while ago. Still holding it. It's up about 100% right now. Still holding on to Intuitive Surgical as well. That one is up about 50% right now. So that's what you can expect to learn from this service. You're also going to get all of the market commentary. You're going to get advanced entry points into a variety of different leading stocks. You're going to get intra-week updates that tell you updated plans on every single trade in the model portfolio. It's going to give you updates on what's going on in the market. And you also get direct access to both Adam Sarhan and myself for any questions that you have, so that way we can help you be successful in the market. That's it. Use coupon code YouTube and get it for 3 months for only $27. I think that you'll get a lot out of it. I think that you'll be glad that you signed up. Test it out. Let me know what you think. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions on anything I said at all, please leave it down in the comment section below, and I will personally help you. Also, if you like this video, click that thumbs up button. That's going to help us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care, and have a great day.